Good afternoon, everybody. What's going on? Hope everybody had a wonderful weekend. About to get into these Sunday setups. But before we get into this week's setup, we will look at what we did last week and see how our potential trade ideas played out. So, USD Chef came down and hit target 2. So that was what? A lot of pips. 80 plus pips. Good call on that one. USD JPY came down 80 plus pips. Good call on that one. USD CAD came down. We caught. Please mute your line. Over 100 pips. Good call on that one. Euro JPY came down about 50 and reversed. So if you practice, it came down 80 and reverse. So hopefully you would have put your stop loss in profit by that point, over 80 pips. If not, you took a hit stop loss. Did not call anything on Ripple. I'm kind of staying away from that. I deleted my setup here. I forgot what it was, but I believe it was for a buy. Let's see. Deleted it there too. What happened? Okay, yeah, because it was the same as the Australian dollar. So we hit this for 100 pips. Good call on that. Smash both targets. Good call on that. Hit target 1. Good call on that. Hit target 2. Almost up to target 2, then a complete retracement. Target 1. Target 2 and beyond. I know some people made some great money on that. Target 1. Target 1.5. So great week. Great week. Great week. So let's see what we can get this week. This is what I want you all to start thinking about. Instead of looking at this as just trading, I want you to start looking at it as investing, which is what it is. It's just short-term investing. But the reason I say start looking at it as investing is because you won't be so quick to take everything. When you're investing money, you don't take everything. You find what you believe will give you the best return on your investment. So I'm always saying, even though I have multiple pairs over here, I do not trade all of these pairs. As you all know, I love NAS, I love SPX, I love gold. And from time to time, I'll trade USD Chef, USD JPY, and the GBP pairs. I'll mark up all of these because people are always asking me about them. So as I always say, my recommendation, find 3, 4, maybe 5 pairs. Study those pairs. Become good at those pairs. That way you can maximize your investment. Hope that makes sense. Can somebody manage these entries for me? Who was that? Thank you, Monica. Thank you. Let me give you permission. Let me close. All right. You should. Perfect. Thank you. There we go. All right, let's look at what we have. Let's start at the bottom. USD Chef. We're on the daily, starting at the daily. Overall, we are still in that downtrend, something I've been predicting since literally October, way up here. And it's still riding down, so we're still good there. Let's see if we can continue down to these targets. If not, here we go. This target, which it has already smashed, this will become your buy zone. This will become your buy zone. I think it will retrace back to the buy zone, which was a previous target, and then continue to drop. So that's what I would be looking for. I'll be looking for a further short from this potential buy zone down at least here. Right here. So your USD Chef, I would be expecting a continuation down. If we look further, I think we'll come down to these targets, to these areas. But if not, let's see if it will continue down at least to the target that we had before. What I'll do, I'll drop all of these after we do the session today so we can maximize time. UJ, same thing, because we have a lot of area that we can still pick up. So potentially it may come back up into these areas. And I think it will continue down to the targets because it's still making, if you look, it's making lower highs. So look for a pullback into this area. If you want to get into it, let's look for a potential sell around this area. If it breaks out, sell here, continue down. It's about a 1 to 3. If it breaks out, then your target is this area here. So let's say it came up and broke up. You could potentially catch about 35 pips to the upside before it swings back down. So I'll be looking at a continuation this way on our USD JPY. And please, if you have questions while I'm doing this, please drop them in the chat so we can address them. I also do how to calculate your stop loss after I go through these pairs, because people still ask me, how do you determine your stop loss? And I'll show you that. I'll show you how to do it mathematically, not by trading. So that's important when you're talking about proper risk management, risking no more than 3%. If you're risky, maybe 5%. So again, UJ, continuation to the downside to hit the rest of the targets that we had. If it breaks above, remember, we're not married to a particular trade idea. If it breaks above, then you take the long, what we had before, to these targets. No big deal. So that's UJ. USD CAD hit perfectly. It missed the target down here by a few pips, but if you took that, you still were able to catch, oh man, 170 pips. Good question, Melik. Are you using technical analysis? Yes, Reginald. All of this is technical analysis. So there's basically three types of analyses. Technical, marking up the charts. Fundamental, news. Sentimental, how you feel in relation to how you believe other traders feel. I trade 98, 95% technical. The rest is sentimental. I don't, to be honest, and it's probably a fault, I don't trade much fundamental. I just stay away from the charts when I believe there's going to be news. And then again, I still don't. If it breaks out of my particular zones, then I just get out. So never claim to be an expert or the best trader. So I trade what's comfortable for me. Melik, when I'm looking at to confirm whether it's rejecting or not, the first thing that I look at is the trend. So I'm on a daily. If you look here, you'll see it's in a downtrend. Not being, too precise, just showing it's in a downtrend. So what I'm looking for, even though I don't mark it, I look to see if it's going to break that trend. So I look to see if it breaks above the trend and if it retests a particular zone. In this case, let me point them out. Do my best to keep the chart clean. So we had a set of highs. Then we had a set of lows. Then we had a set of lower highs. Then we had a set of lower lows. That's all trends are. Down trends are lower highs and lower lows. Up trends are higher lows and higher highs. We have a continuation of lower highs and lower lows. So in looking at that, this is what they refer to when they talk about market structure. We had, again, lower highs, lower lows. If the trend now, if you look, we have a morning star pattern. That's why you have that bullish candle on the daily. In order for me to continue with my sell positions, I need price to respect this area right here. That's the last set of highs. So that's why I have a sell position starting at this target on a buy. Because price could literally come back up to this area. If it does not break this area, it's still respecting the downtrend. Does that make sense?
Absolutely.
Perfect. So that's what I'm looking for. As long as it does not break these previous highs, it's still in the downtrend. With that being said, I will wait patiently to see what price does beyond these previous highs on the daily. If they don't break it, then I'm continuing down in the sell.
Is it a specific time frame you look for those rejections, like even off of like support levels, not just like rejection?
Yeah, so right now, as you know, I start my markups higher time frames. So I'll drop down. This is the daily. I'll drop down to see my activity on the 4. I'll see my activity on the hour. See, on the hour, we're already getting those rejections. See, it came back up, rejected, came down, pushed back up, rejected. So now I need to see what it does on the next hourly candle. Is it pushing up or is it pushing down? Once I see the direction that it's doing on the hourly, then I drop down to the 15. We come down to the 15. Then I start looking for my morning stars, my evening stars, my double tops, those things. Right now, we're getting a rejection of this area. Let me get rid of, there we go. We're getting a rejection around this area. So I'll wait until the market opens to see what it does in the next hour or so. Is it pushing up or pushing down? From there, I determine my entries based on the 15 and the 5. Does that kind of clear it up?
Yes, sir.
Cool. So let's drop down to the 15 and see here. We can get rid of this now because that move has already been made. This is the 15. Be patient around in these areas. See what it does on the hourly, because on the 15 it's pushing up. On the daily, we're still in a downtrend. The daily is more important for the longer, the bigger trades. But if you want to catch some trades on the 15 minute, see what it does around this area. Remember, on the 15 minute, you're only looking for 25, 30 pips. From time to time, you can catch 40 or 50, but you're only looking for 25 to 30 pips on the 15-minute time frame. That's why I like trading longer time frames, so I can get bigger pips. So 15 minute, see it, see what it's going to do. Wait for that hourly candle. See what it does. If you get rejection, drop down to the 15. Look for entries. If you want to trade the 15, if it rejects, stop loss just above the highs. Here we go, right there. Just catch it back down to that double bottom. And then your next one, your next target is the next bottom. Guess where your next target is? The next bottom. So that is an inverted teacup right here. So for my HFX people, this is how I do my entries. I look at these candles on the 15 minute. If I get rejection coming down, I drop that baby down to the 3 minute, and then I start taking puts. So if you were on the HFX session on Thursday, I went 7-1. Doing the same thing that I'm doing now. Marking up higher time frames, dropping down to take puts or calls. All right, so 15 minute, this is what you're looking at. Rejection here. Look for the rejection. There's no, when you think as an investor, you don't rush trades because you're preserving capital. See what type of activity you get around this zone. If it continues to reject, take the sell. This is a potential $52 pip trade. That's on 15 minutes, which is a lot for 15 minutes. When it comes the first 18 or so pips, 20 pips, you should be at break even. Once it hits 25, 30 pips, you should be in profit, and you let it go. You don't have to look at the charts anymore once you're in profit. So hope that helps. Hope that helps. But back on the larger time frames, I'm looking forward to come here. And I'll drop all of this in the chat after we are done. So my longer time frame right here. Stop loss right in there. It's a continuation from last week's trade. How many rejections usually does it take before we get cautious and expect a breakout? I do 3 to 4. And then I trade with my gut a lot too. So I don't know if that's a good thing or a bad thing, but it works for me. So Euro JPY, we caught the sale first from there. That's why that was marked. So let's mark up a new area. Our zone to watch right now is right in here. I'm going body to wick and then this evening star pattern. So let's see if it breaks above that. That's also a W. I don't really trade W's. I know Mello does. That's why I learned about the W pattern. So let's see what it does in there. Potential sale, yeah. Look for rejection right here. Let's see. Yep, look for rejection right there. If it breaks above this, there's your target. Stuff is not difficult. Watch this. Look at that. See, it looks small on the larger time frames, but it's not small at all. Look at that. So I will be looking for rejection in this area. If it doesn't reject, no problem. Buy it. But Euro JPY has been in a consistent downtrend for some time, so I will be looking for a continuation. This is a nice pullback, and then I'll be looking to take it back down. So on the higher time frames, potential targets still marked. If you're patient, you can get some good pippage, if that's a word, in here. Right in there. That's a 1 to 5. When you're trading 1 to 5, you don't need a lot of winning trades to be in profit. 4 out of 10, you're in profit. Staying away from Ripple right now. Let's see what we have on. We're in an uptrend right now, but we are in an overall downtrend. If I can't see anything on the daily, I go up to a weekly. So it's in a period of consolidation, really, on the larger time frames. Four. One of my things too, if I don't feel it, if I don't see it and I don't feel it, I don't trade it. If you're on my HFX session, I said that if I don't feel it, we won't take a trade. I'm not in a rush to lose my money. Here's your area right here. Below this zone, we'll be looking to sell it on the 4, but that's a lot of room. On the 1 hour, see all of this activity? We need to get out of this for a trade. Breakout, we come into these areas. Remember, I always say your money is made in the silence. So we trade noise to noise. Then I measure to see if it's worth it. Potential 45 pips may be worth it for you. but my move is to the downside now because we traded it up. So on the daily, our next target will be right in these areas, right in here. Let's see how far that is. 100 pips. So I'll come back to that. Come back to that. About the same here. Not in a rush to lose money. Cool. Next area will be about here. See if it's worth it. 60 plus pips. That's potentially great for 15, 30-minute trading. Clean it up. Let's clean it up on the 15. Body to wick. Let's go with a graded today with a black border. There we go. All right. So I would need it to break above this zone for me to feel comfortable. Right here. If it breaks above, I will be looking to come into these areas. Right in here. Let's see if it's worth it. Nope, not worth it for me. So I'll come back to AUD Chef too. I'm going to leave this as it is. That's why I will come back to AUD Chef because these are similar. Leave it as it is. If it rejects around this area right here, stay in the buy. Because it's already broken out of the uptrend. So your potential sale is right here, which I believe that was it anyway. And then your targets are what we already had marked up. Keep this stuff simple. So your buy is a rejection here. How do I train my eyes to see this? A lot of looking and a lot of bad trades. That's why I'm always telling people to be patient. Just trust it. Trust the markups. You get to a point where you just have to trust yourself. That's the only way you become confident in trading. You have to be willing to take the loss if the loss comes. You can't appreciate the wins and not appreciate the lessons. This was perfect. Perfect. Let's see if we have anything coming up. All right. This is something. Larger time frames, we're in a downtrend. we have to come all the way back here to see the previous high on the daily. Let me see if I can show you. There we go. See this? This is the monthly. We had a huge drop. This was back in a long time ago. And it never recovered. So it's still a downtrend. But as we trickle ahead, we are in an uptrend on the weekly. We're in an uptrend on the daily. On the 4 hour, you can see the activity. So it pushed up, consolidated, dropped. Here's the double bottoms. We already had this. So now we can look here. This is your area of interest right here. See what it does here. If it pushes beyond this area, we drop down to the hour. See, it looks like rejection here. If it rejects, we take it down. If it doesn't, we take it up. If we take it up, we come to these next areas. So when I'm trading, I look to see previous candles. I need it to break above this wick here for me to take it up. And then you can catch potentially 40 pips. See this? This wick? On the 15, I need it to break above that wick. So if I get a push up, I'll see if it comes back to retest this area. Not a particular, remember our lines, our markups are imaginary. So price is not respecting our particular markups. So I will see if it breaks out, see if it retests this general area. If it does, that's when I will look for a potential trade up. If it doesn't, then I'll take it back down. But I will be looking for this to continue pushing up. So something like this. It could come. If it drops, I'll look to see what it does and push up. You could also do this. Break out. Retest. Then drop. It can do whatever it wants to do. We just be patient. We wait. We trade what it gives us. So my next area of interest would be right in here. Watch this activity around in this area. Let's look at the daily. It should be about the same. So we hit the targets here. We had a push up, a rejection, or a pullback, excuse me, then a push up. So when you see wicks at the bottom, that means buyers took control. When you see wicks at the top, that means sellers took control. So your next area of interest is right in here. That's gone. Here. Watch the activity around that area. There's your buy zone. If it rejects, which I don't think it will, it may push back a little bit, but I believe it's going to push through. Let's see how many pips that is. Yep. 35. If it breaks that area and that wick, here's our next target right here. Right in these parts. Right around the even numbers. So that's the target on the buy. That would be my sell. My targets will be right in here on the sales. And then right in here. We drop, that's the daily. Here we go. Perfect. Right in here. There we go. In fact, you could even take this sell up here if you drop down right in here. So your first target would be here, if it's worth it. Yep. There we go. Then you can take partials along the way. Just like that. You could even take partials. Perfect. Good old pivots. Notice I like to keep my charts naked. They're called naked Forex. There's GBP JPY. How far into the zones before you take a reversal? It depends on the wick activity and the different patterns that the candlesticks make. I pay attention to evening star patterns, which is the 3 wicks, with the middle wick generally being higher. Evening star is a potential sign for a sellish, bullish. For bullish activity, morning star, which is the opposite on the bottom, evening star bearish, morning star bullish. My risk to reward, at least 1 to 3. I like 1 to 5, but at least 1 to 3. If it's not 1 to 3, I'm not taking it. Not in traditional trading. It's not worth it for me. If you trade proper risk to reward, like I said, you don't have to win 7 out of 10 trades to be profitable. You need to win 7 out of 10 trades if you're trading what some people do, 2 to 1. Notice I said 2 to 1, not 1 to 2. 2 to 1, where people have a 50 pip stop loss for a 25 pip take profit. That doesn't make sense to me. If your stop loss is 50 pips, just trade the 50 pips. Yep. Gold. Same area. Let's see how it plays around the same area. So that's your area of interest. If it breaks below that area, just sell it. Right here. There's your area of interest. Same zones. Not even touching it. All right. Here's where the fibs come in. Watch this. Take your fib tool. This is on the 4 hour. Take your fib. This particular one is on the 4 hour. You can do it on any time frame. I come to the most recent swing low. Take it to the most recent swing high. If you do wicks at the bottom, do wicks at the top. What did I do at the bottom? I did body, so I'm doing body at the top. All I do now is take this target to the next fib area. And look at that. It's right at the pivot. So if you do the breakout, how I usually do on indices, that's your buy zone. Your target is the next fib. If you trade rejections, if it does not break below this box, you trade it up. Your sell zone is where it is. I am not touching that. So we're going to leave that right there. Same thing on NAS. Watch this. This is in consolidation. So this will be a simple trade. If it breaks out, here's your zone right here. This is the 4 hour. A lot of people like to trade these on the 15. I still mark up on the 4. Doesn't change. Look. There's your breakout area. So we take the fib, same thing. This is our swing low. Take the fib. You can do it from this body. You can do it from this wick. It does not matter. Let's do it from the wick. I took it from the wick, so I go to the wick right here. There's my target. The next fib. If it breaks below, here's your target. The next fib. We can just adjust it. So your buy zone now is here. For the breakout buy, it's right here. If you want to trade rejection, your buy zone is right here. Your sell zone is right here. Target the fibs. Target. This becomes a target. This becomes a target, which is right on the money. This becomes a target. So when in doubt, target fibs. Target. Just like that. Yes, be patient.
Recap of your fib levels settings.
Say that again, please.
Can I get a screenshot of your fib?
Oh, yeah. Absolutely. Absolutely. Let's do it. Let me go to some cleanness right here. There you go.
Your settings.
Can you see them?
Your settings.
Oh, the actual settings.
Yeah. Coordinates.
Every time I see a Fibonacci chart, I remember in school when students would tell me they would never use the Fibonacci in real life. Little did they know that their life is Fibonacci.
Right. Thank you.
You're welcome. All right, so we're good there. German 30. Beautiful. Everything was beautiful. I'm going to do this one from scratch. Watch. You start to just notice where price reacts. See the wicks around the same area? Activity here, activity here, activity here. So, doesn't have to be exact. There's your zone right here. Price rejects here, buy it back up. Price breaks out, sell it down. Let's do a fib on the daily. The previous low, this was a low, a higher low, higher high, higher low. So right in this area. I'll do body to body. Right here. As you see, price played around the 382 area, right where we marked it. So what are your targets? The fibs. Target. Target. Does it mean it will hit these areas? Absolutely not. But at least I have some benchmarks. I can adjust my trades wherever I see fit within here. So your next safe buy zone, if you want to have the safest buy zone, is that breakout. And then here's your target right here. There you go. Breaks below. Safely right here. Now that's the daily. If we come down, we can catch activity within. So here, same thing right here. Breaks below, sell. Target here. Target here. Target here. So this will be my sell zone, right? Let's take that wick out. Because remember, whatever it does on the smaller time frames is just a piece of what it's doing in the overall big picture. So my buy, if you want to be safe, right above here. Target, previous highs. There's a lot of room in here. Yep, I would take that as a target. I would take that as a target. You don't need a lot of pippage when you're trading indices. Just a little bit. There you go. Same area right there. So daily, area of interest is down here. Drop down to 15. Area of interest is right here. And the big dog. Let's go clean. 4 hour. Right here. Notice I always go from body to wick when I draw boxes. Because wicks on larger time frames are candles on smaller. And in this case, it's wicks too. Does price need to close above or below or just break it? For safer trades, close. Sometimes on the indices, you can catch a break. If you have strong momentum, you can catch a break and trade it. But that just comes with practice and going with your gut. So that's the 4 hour. This is the 15 right here. I'm almost anticipating when the market opens that this price will be way beyond this anyway. Right here. So that would be a sell area. Rejection here, buy it up. You all right, dude? Okay. Target right in here. Psh. So if you buy rejections, this is the target. If not, this is your buy zone. If you want breakouts, this is your buy zone right here. Here's your first target. Here's your second target. Here's your third target. I like to be kind of conservative. Most of the time it shoots way beyond my targets. When you're drawing the support and resistance on the 15 minutes, how many pips do you usually look for on German 30 or Nas? Like you just it's not based on how many pips I look for, it's based on the zones. My targets are previous areas of support or resistance. So for instance, does not look like a lot, but you could trade literally this breakout to here. That's 160 pips on US 30. But for me, if I'm going to take a trade with a US 30, I need way more than 160 pips. So I just go previous zone. So this entire area would be a potential target. Even though I put a line, it's this entire area where I see the wick activity. Actually, a safer one would be here, but I would trade this one. Because I enter based on the 15, but I trade based on the 1 hour, 4 hour and above for my targets. Hope that makes sense. And this would be a potential sell zone here, target right in here. Next target will be right in here. If you're trading indices, hopefully you know to trail stop loss. Well, anything trail, but especially indices, trail your stop losses. Something else before we wrap up. If you, let's say you have a $200 account, you should not be doubling your account in one day. With so many people say they doubled their account. Yeah, if you have a $5 account and you double, awesome. If you have a $200, $300, $500 account, you're doubling your account. Yes, it's good that you double your account, but no, it's bad because that means you're not exercising proper risk management. You should not be doubling your account, especially if you have a large account in one day. That's improper risk management. It's good when you win, not so much when you lose. 5% a day brings freedom your way. 5% a day. If you have $100 and you get $5 in a day, that is great because you won't get that much with a savings account. Always compare your trading account to a savings account. That will keep you humble. 5% a day is all that you need. If you're in trades to where the trades are way beyond 5%, move your stop loss to that 5% and let them ride. And then trail along the way. So then if you get 20%, awesome, because you already secured your 5. Does that make sense? Y'all quit trying to hit home runs every day. That's why I blew accounts, because I would try to help. I'd be up $700 on the $300 account. Sounds good, but when I take that mentality to the next day, the market bites me. So it will continue to send you lessons until you learn it. Be patient. Stop trying to pay your bills with your trading account until you are full-time trading. 5% a day. Once you secure 5%, put your stop losses in profit so you don't lose what you've already secured. And it's not yours until you withdraw it. Y'all stop trying to hit home runs with these trades. That's why so many people are frustrated. You're over leveraging. If you don't over leverage, you shouldn't be upset if you lose a trade. You should be looking for why you lost a trade and then get back in it. Yeah, trying to retire with every trade. Exactly. Stop that. Stop that. You're not going to go from $1,000 account today to a $20,000 account next week. $20,000 account. Stop trying to trade with these more seasoned and experienced traders. 5% a day. You have $1,000 account, $50. That's your goal for that day, $50. Trust me, it will grow. It will grow. But you have to be patient. You have to be disciplined. Y'all, you should write down, discipline is freedom. Discipline is freedom. That being said, I will drop these setups in the Telegram group. If you have questions, please feel free to ask so we can get those answered. Let's have another great trading week, y'all. Let's have a profitable week, a disciplined week, and I will see y'all during the week.
Oh, I think you were going to go over stop loss.
Oh, thank you. Yep, let me do that. Stop loss. Here we go. Stop loss calculation. Example. Your account is $1,000. Risk management says you are not to risk beyond 3%. Perfect. 3% is equal to $30. That means you are willing to risk, or should be willing to risk, $30 on a trade. Okay, Doc, what does that have to do with the stop loss? I'm glad you asked. Watch. The way we calculate the stop loss, we know that our max risk is $30. That means if you want to go by pip count for stop losses, this is how you calculate it. Let's say you want to have a 30 pip stop loss. Well, if your maximum risk is $30, that means the most that you can risk for this particular trade is a 0.1 lot size. And that's one trade. You can't risk $30 on 5 trades, because now you're above your maximum risk management. Does that make sense? 30 pips times a 0.1, which is $1 per pip. That's $30. Now what you can do is you can split this up between multiple trades. If you'd like to do that, you can do, let's say you do 3 trades. And you still want to do 30 pip stop losses. Well, that means you need to reduce your risk. So instead of trading 0.1, you can trade 0.03 for each trade. And that will keep you within your $30 risk for the day. Does that make sense, y'all? Cool.
Yes.
Cool. Now, if you want to be a big baller and you got $1,000 account and you want to trade a standard, that means your stop loss should be 3 pips. So make sure you catch a sniper entry. That's how it works. So it's not about the stop loss. It's about your risk. What are you willing to risk? Divide the stop loss by your risk. That determines how many pips your stop loss should be. It's all about your risk management. So hope that helps. If you have further questions, drop them in the chats and we'll make sure they get answered. I'll drop these setups in the chat. Y'all have a wonderful day.
All right, Doc.
Thanks, Doc. Thanks, Doc.
Thanks,
Thank
Doc.
you. Appreciate it.